Today we're going to be talking about debit spread strategy and whether or not a debit spread can be profitable and how it is profitable. So we're going to go through the structure of the trade, show you an example that we took last week and closed the next day. For our example, we're going to be talking about a put debit spread. And for this example, we're going to be using MSTR, ticker MSTR. As you can see on the screen, we have a 134 put and we have a 130 put. We bought the 134 put, which is represented by the arrow on the red line at the top. We sold the 130 put, which is represented by the arrow on the bottom. We paid $1.38 for this spread. And the way a debit spread works is you're buying one option and selling another. They have the same expiration date, but the strikes are different. So on our chart, we can see at the top line, the 134 strike, and at the bottom line, the 130 strike. We bought the 134, sold the 130. Now we only held this trade overnight, and we put the trade on just before the close on Thursday, the 26th of February. Again, we bought the 134 put. We sold the 130 put. We paid a net debit of 138. The idea with a debit spread is you need direction. And so by placing this trade, we are anticipating that price is going to move down. So by buying the 134 at the top of this channel and selling the 130, we need price to move towards the 130 put in order for this trade to be profitable. As we look at this chart, we can see the previous day close on Thursday where we placed the trade. And then below that, we can see the Friday open. Now our red lines that you see on the left at the top were the 134 strike, and the red line at the bottom is the 130 strike. And we opened up below that on Friday morning. And through the course of the day, you can see how price gravitated from about 128.5 to about 130, and then slowly went lower through the course of the day. Now we had closed our trade a little early, but we did receive and recognize a 88% return on our investment. So we exited that trade at $2.60, got in at $1.38, and got out at $2.60 on an overnight trade. So in this case, with a put debit spread, again, we wanted price to go down, as you can see from the arrows, and it did, and we profited nicely by holding this trade a little longer into the day. Had we held it all day, we could have recognized an even greater return, but our goal is to get in and get out. If we can make a decent return in a reasonable period of time, which in this case, 88% was pretty good, we decided to exit the trade and look for something else to trade the next time. Click on the link below if you'd like to learn more about this strategy and how we trade it and how it can be profitable for you.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks full risk